The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope everyone out there is faring well in these tumultuous times that we're seeing these days in the market. Yet another massive day of red on the street today, but we will dive into all of that in a minute. My name is Mark Longo from theoptionsinsider.com, as well as the bulk of the shows on the ever-expanding Options Insider Radio Network. And I am joined today by the usual cast of characters, starting off with the mad typist, a.k.a. Mark Sebastian from OptionPit.com. Mr. Sebastian, what emails are you so furiously sending over there, sir?
I'm just furious with some floor broker that is screwing over a customer of mine, and it's driving me nuts.
You working a futures order?
He's doing an order in SPY, and they're filling him 10 cents through the market, and the screen is a $1.52 bid, and they're filling him like 145, and I'm like, I mean, it's just insane.
So things are well then in the option pit land.
This is a great trade, but he's going to lose a huge portion of the edge.
Well, maybe your broker will adjust you.
This guy's broker is just, I don't get.
Oh, he's giving you the fills he's getting. I see.
Telling me his fills.
Oh, okay, yeah. Not much you can do there then. And we are also joined by the man from the mountains returning to the podcast for his weekly sojourn down from the mountains, good old Mike Tosaw from Know Your Options Inc. Uncle Mike, how are things in the mountains today, sir?
Oh, things are going well. Kind of a flat day in the market today, but
yeah, not much going on. Not much to really talk about today.
Well, what I think's ironic is that you look at all this down market. It all happened overnight. S&P E-mini at 8:30 this morning was at 1126.5, I believe, and right now I'm just looking at it's 1125.25. So. Everything is well. Everything is good again.
There's
folks.
Your close-to-close volatility for you right there.
Yeah, that's all that happened.
We had a long discussion on one of our other programs, Volatility Views, about the merits of close-to-close volatility measurement versus some of the other methods. And a day like today, you can maybe see the merits of maybe one of the barrier methods or some of the other methods that take into account the actual velocity of volatility. And then last but not least, joining us on the panel yet again, he's becoming quite the regular, good old Mr. T-Nav, Mr. Tim Navabi from Options Express. Mr. T-Nav, how are you doing today, sir?
I'm doing pretty good, Mark. Thank you very much for asking. Sounds like, my day was like everyone else's. Just busy, a lot of action. So how are you doing?
I am doing good. Now that the team's all assembled and everyone's back, we're good here. So now we're going to roll right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the show where we discuss what was moving in the broad markets today, and pretty much everything was moving, pretty much everything to the downside today. We saw a sea of red yet again in the old broad indices. The S&P down 37 handles, as Uncle Mike alluded to, closed at 1129.5. The Dow down about 391 to 733. The Nasdaq down a whopping 82.5 handles to 2455, and the good old VIX cash up 4.08 to 41.4, up about 11% on the day. So a sea of red yet again. I'm looking across my screens today. I don't really see much at all. Oh, ironically, there's two greens on my screen aside from VIX. Netflix, which closed up 3 cents. So they stopped the bleeding today. We're up 3 cents. And the good old SIBO. People finally seem to have figured out that the SIBO does well on a day like today. And instead of crushing it, 3% along with the rest of the market, they actually bumped it up a little bit today. So people are finally starting to learn that argument at least. But it was just a sea of red today on the street. Of course, we have these growing recession fears that I'm not sure if they ever really went away, but people seem to be focusing on them yet again this morning and in the overnight session, which of course led us to opening down today. And as we mentioned today too, looking across my screen, one of the interesting stories of today, I think, is actually dovetails with something I was talking with some people back at that conference I was at in New York last week about just the growing correlation across multiple asset classes. And if you look at today's list, you look at most of the broad equities, you look at the big commodities, the metals, what have you, there's pretty much a sea of red across the board. Unless you're one of the people buying bonds these days, you saw a downturn. So it was a pretty interesting day today. Uncle Mike, first off, since it was an active day, Uncle Mike, what was the BBI today?
Oh, I'm staying in my puts. I just stayed there, and I'm just like, well, so I'm not too antsy to roll down any puts today. So BBI was very stable today.
Ironically, the down days are probably the easier days for you. Kind of just watch your puts go, and then you sit in the back room smoking cigars and throwing medicine balls there with Auntie Mike Kavanaugh.
Well, it's okay. It's like, when when the market goes up as much as it went down today, and if I'm a little bit bearish on an underlying that we're collaring, that's a lot more stressful because of the fact that, well, should I roll it up? It's going to come right back down. So if anything, I'm more stressed out when we have up days this much. On the puts, well, such is life.
And good old Mr. Seabass, are you still leaning heavy to the downside on VIX these days, or have you started speccing to the upside too, maybe putting on a VIX strangle?
I've been short for the last 3 days. When I saw VIX vol on Tuesday, I actually pointed this out on my blog. I pointed out that VIX implied volatility was below late July levels, and that VIX, people were starting to bet that VIX had settled into kind of a range. And then I noticed that the OCK 32.5 straddle you could buy for like $6.40. And so I pointed out, hey, everybody, why don't you buy the VIX October 32.5 straddle? People that did that are very pleased with me today. It's going up for about $9. So that did pretty good for 2 days' work. And I've been short SPY. The only place I'm still getting beat is I continue to try and short the Treasury, and they keep just railing me for doing it. Every time I short Treasuries, I get like a nice kick. But what I've been actually messing around with is this short-long trade. The trade that I actually think is the absolute best trade is, Mark, what do you think it is?
Is super size short to the downside in VIX.
Well, no. I would be all over the short straddle or the short time spread. That'd be my trade right now. So I would be wanting to get all the gamma I can, and I'd be wanting to buy be short Vegas. So when this thing turns around, at some point, you're not getting blown apart, and you just kind of keep rolling and managing. And if you get filled at decent levels and you put it on, it's a great trade. Now, a lot of people can't sell time spreads. For those of you that can't look at ES futures, don't want to mess with that, hey, I got a great trade for you. What about buying VIX options and owning XIV? That's a really interesting combo trade where you can kind of get both.
You know, it's interesting you mentioned the short time spread right now because we actually did a little bit of the opposite today. We've been trading a lot of bullish risk reversals in forward lately for you can get them pretty much for credits almost or for even for the past few months if you leg them correctly. And today we were putting on some new stuff in forward because it's getting hitting such attractive levels here. I know Uncle Mike is a long-term forward bull, and I tend to like forwards prospects as well. So we were looking at doing it. We actually ended up doing the opposite. We ended up doing, because the weeklies here were just so juicy, we did a long time spread actually where we got long some AUK and short some weeklies, second weekly in SEP on the 10 strike for. So we have some short gamma. The reason we did that though is because we have too much going on here these days to do a lot of these things delta neutral. So I'm not going to sit here and be able to hedge my gamma if I did have a lot of long gamma. So what I ended up doing instead, by putting it on as a long spread instead, I essentially really legged into almost a covered, and actually not a covered call, but more a double repair to the upside. I'll be ratioed heavy on forward to the upside. So I don't mind that, given that these days my time for managing a delta neutral position is kind of limited. Maybe I'll have you work my scalps for me. How about that, Sebastian?
Oh, yeah, totally. I'm all about it.
At the end of the day, when you're on the floor, 99.9% of your time was working scalps anyway. That's what all of us did.
I know.
So you were pretty much just an underlying trader 99.9% of the time anyway. Speaking of forward, Uncle Mike, what are you guys up to in forward these days? You still just long the underlying and long puts?
Long the underlying. What we have on there, I actually shorted some more puts for us. We have such a vast variety of people in at different levels. It's hard to say with everything, but we're at a combination of long-term premium, short-term premium, and long the underlying, if that makes. Either we're bullish on Ford in a lot of different ways.
You got it across the board. Yeah, these
it's hard to say when you have multiple accounts for different people coming in at different times. It's hard to say. So I'll just say I'm bullish on Ford still.
You know, I had a similar problem actually today. I was actually doing some trades also for some. We have accounts across a variety of different things, and I was actually doing some things in some of our longer term accounts that I rarely have ever touched, including an IRA. I haven't used them in forever, and I won't say which competing firm I was using today to access an IRA and trade options in this IRA, but oh God, what a pleasant experience it was. And by that, I hope you can hear the sarcasm dripping on my voice. It was just to even put on a simple cash secured put in an IRA was such an enormous hassle with this particular broker. And they were giving me options chains that were showing delayed quotes, and it was unbelievable how much they really don't want to be players in the options space.
Options are risky, Mark. You should stay away from them.
Yeah, it was just amazing. I know these guys. I know the people who run this. I've met with them numbers of times. They maintain quite a few times that they want to be viable in the options space. And yet whenever I look at their interface, the hoops they make options traders go through on their platform, it's just amazing to me. I'm sure a lot of our listeners can probably guess which firm I'm talking about. I won't name names so that you OX boys don't get in trouble for slamming a competitor on your show.
I'm a little disappointed you didn't manage to use the term sojourn during that soliloquy.
Sojourn. I took a sojourn during my soliloquy to this trading firm, and yeah, just putting on a ridiculous cash secured put in something simple as Ford, it was amazing. Anyway, good old Tina, what was lighting up your tape today? What were you watching? Actually, before we dive into that, since Uncle Mike, we had you talking before about Ford, why don't we go in? Also, we mentioned the correlation of assets. Why don't we dive into our metal/commodity rundown too? Because it was a sea of red in that space as well today.
Yeah, I'm kind of in the short term. I think we might be seeing a little bit of a pullback in the metals, and I had talked about this a couple of weeks ago too. I thought we had a little more upside to the 200 level in GLD as an example, but it was getting a little bit weaker. So I've kept on the collar. I have not rolled down any puts, but I've been in the 185, 170 collar. And so I don't intend on, if we're down $5 tomorrow in GLD, I'm not rolling down tomorrow going into the weekend. Whereas typically I would, but for right now, I'm a little bit more cautious in the metals.
Well, Mike, how far do you let GLD run before you have to start taking a stand and saying this is kind of the level I like, just out of curiosity? Where it's down at 169 and change. As I look at it, it could run to the real support level that everybody's looking at looks like 165, 166. And then from there, man, this thing could get to 150, 157 pretty quick.
Yeah, I think that if you look back to the beginning of July when the GLD when the recent gold rush started, we'll call it, I think the level's kind of like what we were seeing at the beginning of July. I remember being on vacation, having to work on vacation because we had so many orders coming in when that came in, and I could see it going down there as well. And at least for right now, I'm very happy to be in the put for now.
Now, here's a question. Do you consider rolling it into like a put spread or anything along those lines?
Possibly. That might be like, let's say, for example, that GLD were to go down to the 150 level tomorrow. I'd consider turning it into a knockout trade, and what a knockout trade is, folks, it's a collar, but instead of using just a straight put to hedge yourself, you're buying a put spread, like what Mark is talking about. I would consider it that level, and I have done it, but that's more the exception as to the norm. Gold probably would be one I'd consider it more because it's a little bit less volatile. Silver, I would not do it on. I think silver is too volatile to do it on. And individual stocks like Apple or any of the other things that we collar, I probably wouldn't do it on. But gold is one I would definitely consider doing it on.
That makes some sense because I feel like there is kind of a floor to gold at certain levels where people are just going to have to start picking back up at, like, I think right around 1,500 an ounce, $1.50, and a little over 150 in GLD makes a lot of sense. Silver not as much, but gold, I mean, just as an asset, I think there's still a lot of people that want to own it that don't trust a lot of these other governments and other things that's going on. Although silver, as that drops toward 30, that's going to start to look very, very tempting. Don't you think?
Yeah, silver's down 9% today, and around the 32 level is what I'm seeing for silver. I think it's going to start getting attractive again. If silver were to go down to 32 tomorrow, I'd have, like, right now we're in the 38 is our put option on silver, or SLV, I should say. If silver's down at 32 tomorrow, I'm going to have a hard time not rolling that one down.
Yeah, no, I'm with you. Here's a question. If you're a werewolf, are you really scared as silver sells off? Because my theory is that silver at 40, there's not a lot of people making silver bullets.
The prevalence of bullets goes through the roof once you get below 40.
So werewolves, I'm thinking, are pretty happy with the elevated price of silver.
I had never considered the werewolf index before for silver.
Funny.
Yeah, werewolves have a certain support. I think they should just be working tons of limits at the 40 level in SLV whenever possible. That's hilarious. That's probably one of your better ones. I doff my cap to you, sir.
Yeah, no, silver drops below 30. You hear, oh, suddenly, and that's the signal to their broker to buy it.
Mr. Tina, werewolves aside, any other commodities that you were particularly interested in today?
Not too much. I mean, it was just pretty much everything right across the board. Copper was down pretty big. Crude oil was down. I mean, crude oil is right now 80.40. So yeah, just right across the board. Just very difficult day and very busy day.
Well, with that, I think we're going to close out the old trading block and roll right into the odd block.
The odd block.
And welcome to the Odd Block. This is, of course, the portion of the show where we discuss the interesting and or the unusual options activity that was lighting up the tape today. And speaking of unusual, we're kicking things off with Yahoo, ticker symbol, of course, YHOO. Sebastian, feel free, sir.
Yahoo!
That's all we need, just the trademark Sebastian Yahoo call. We put it in here just for that.
Oh, I like that.
But what we saw today in a nutshell was some lingering buyout spec really driving upside call activity in Yahoo. This came on the heels of one of our favorites, an analyst today, upgrading them to buy from hold with a price target of a whopping 18, so $4 higher from where they closed today. And the reason he is cited for it is that the likelihood of a buyout has increased to 80%. I'm not sure where the hell he gets this probability from, but so.
See, I had it 76%.
There you go. See, that's why you're not an analyst. That's why you're not getting the big bucks over the analyst, you know. You can't throw out these ridiculous probabilities and leak and put them out to the press in a release and get all your coverage. But nonetheless, options traders seemed to agree with this analyst. We saw quite a bit of upside call activity. Two of the most interesting and probably more sizable trades we saw today in Yahoo was first, we saw a pretty sizable OCK 17 position being rolled out and down to the November 16 strike. So this guy, he did about 14,000 times as overall. So this is the guy obviously taking a position he had, which was perhaps a little bit farther out in range up on the 17 strike and rolling it down a little bit, but also extending it because he thinks that this buyout might be happening as well. We also saw front month activity here, which was opening front month activity on the OCK 18s with well over nearly almost 13,000 contracts on the day, going up almost 3/4 of them, about 73% of those contracts lifting offers. So a lot of people coming out and just gobbling up the OCK 18s, which is coincidentally the strike price that this analyst cited. These things went up for about an average price of about 27 cents. So this stock's got to gap up about 30% for these calls to pay off. So it looks like a lot of people are drinking the Kool-Aid here and buying what this analyst is selling and saying that 18 is the level and that Yahoo is getting bought out.
Here's a question. Why do you buy Yahoo? I mean,
I don't know. I don't know what they really do anymore. They have a search deal with Microsoft, so Microsoft handles their search. They have a lot of content destinations.
They have a lot of email, a lot of content destinations. They do fantasy, football, and stuff like that. But really, what is, if you're buying Yahoo, what are you buying? I mean,
I don't think they even know. That's why they fired their CEO recently, because she didn't know what the heck they were, what business they were in.
There's no, I mean, so leave them, I mean, let this thing die. You know, the only reason why you buy Yahoo is a pity thing, so you can shoot it in the head.
Yeah, maybe you come in and cherry pick some of their better assets that have a lot of traffic.
Yeah, I mean, that's all you're doing is picking over. You're paying too much to be a vulture. I would buy Yahoo for $4 a share, not 14.
Well, let it be known, Mark Sebastian's price target, $4 on Yahoo. At that price, he'll buy it all, he says.
Well, and you know what? Whoever buys them, I'm immediately going to short, because I know they have no idea what the heck they're doing.
Yeah, they have a bunch of properties like OMG that most people say they never heard of, but they get a ton of traffic. Yeah, but aside from that, you're just buying a bunch of individual properties with no real connecting thread. There's no inherent brand to Yahoo anymore, aside from that screen that Sebastian likes to do. Aside from that, there really is not much else. But nonetheless, a lot of people putting their money where their mouth is and specking to the upside on some lottery tickets, front month lottery tickets. So looking for a near-term pop. They think this buyout's coming in the next few weeks, obviously. So we'll see if this analyst is full of it or if his 80% number is on target by October expiration. And then moving on to another name that's been in the headlines quite a bit lately because of our friend Warren Buffett, good old Bank of America, ticker symbol BAC. They closed down about 5% today, or 32 cents, to close at $6.06. They do about 500,000 contracts a day lately. Today they did nearly 1 million, so about 2 times their average daily volume. A huge chunk of that, about 300,000 contracts or so, came in 3 large trades that looked kind of like, pretty much, as our writer here put it, raising the white flag, or pretty much people just surrendering on BAC. A lot of closing sales of calls, longer term calls, just being closed out because they just think BAC is nowhere near what it used to be. We saw sales of the Jan 12 12-half calls and then the January 13 12-half calls, 2 blocks that were about 100,000 contracts each, both of them being dumped. Both of these contracts were trading well over $3 back earlier in the year when the stock was trading far higher, up around $14. So these were people who had much more upside outlook on the name and are finally just throwing in the towel. Perhaps even most painful of all, we saw a closing sale of 100,000 of the Jan 20 calls for a penny. So somebody had just gobbled up and loaded up to the upside here on Bank of America, and today finally said these lottery tickets are just useless. I'm just throwing in the towel. So he dumped about 300,000 contracts of BAC, but a lot of aggressive call sales, let's just say, in BAC. You guys, Uncle Mike, I know you like the financials. Be like XLF. You don't play in the individual names, right?
No, Bank of America broke my heart a couple years back when they promised we're not going to get rid of our dividend, and then they got rid of their dividend. In my personal account, I had a position in them, and it wasn't a big position, but either way, it's one of those things to where normally I'm a forgiving person, but when it comes to promising that you're going to keep your dividend and then you get rid of your dividend, I'm not a fan.
Yeah, so nonetheless, apparently this guy agrees with you. He was a fan, and his heart has been broken as well. When you're dumping 100,000 far upside calls for a penny, that's just a heartbreaking trade right there.
Yeah.
Yeah, I mean, I'm sorry, but everybody knows this thing is a piece of garbage. The good news is market makers prepare to have a feast trading this thing back and forth to collect order flow payment. So you guys enjoy this. Citigroup, we should just call this Citigroup
yeah,
Part
this
2.
is the new Citigroup, really, if you look at this name.
It is Citigroup Part 2. And I should have seen the writing on the wall when everybody was like, oh, yeah, well, everybody's going to start trading BAC. That meant that it's a piece of garbage and nobody was afraid of it going up.
If it's going to be Citigroup, then just dump the 6 straddle because it's going to sit here forever if it's going to follow the Citigroup path.
Well, no, I mean, it could get to 5.
That's true.
Would be the Citigroup official level. That's the Citigroup challenge.
The Citigroup support level. What do the werewolves think of BAC, I wonder?
They're hedging it with silver. They're doing a pairs trade, silver and BAC.
There you go. Well, we have a couple more quick hits we can do here in the old odd block to close things out. CVA, this is not as little of a one as Sebastian likes, but it's a little one. CVA, Covanta Holding Corporation, closed at $13.58, down about 33 cents today. They do about 200 contracts a day. They did 18,000 today. And this is the name, you guys probably haven't been following it, but if you look at the chart, just crushed over the past few sessions, down from about in the 16s and even 17 about a couple of weeks ago, down to in the 13 handle today. It looks like someone thinks that's substantially overdone because they came in and brought a pretty sizable bullish risk reversal here that amounted to about 15,000 of the 18,000 contracts we see going up today. He sold 7,500 of the March 12-half puts for about 85 cents and bought about 7,500 of the March 15 calls for about somewhere in their 90-cent range. So he did it for somewhere about around a nickel to even if you look all the pieces together. So this guy obviously thinking that by March this name has been well overdone and is going to bounce back substantially. Good old Covanta Holding Corp. They're a waste-to-energy company. So they do waste disposal and recycling. Obviously this guy bullish on waste, just like Sebastian. We'll close out the odd block with actually a quick review of some activity we talked about on the last show when Auntie Mike was here about RRC, Range Resources Corporation. We talked on the last show that people were coming in. There was a rumor there was going to be a suitor coming in to buy this name. Stock was trading around a 65 handle or so, and people were gobbling up the 65s mostly, and also upside 70s and 75 calls front month, just devouring these calls. It looks like they had a chance to actually do well on this trade. Yesterday, the stock really gapped up, got as high as 77. So these 70 and even 75 calls were in the money. If you look at the time and sales, looks like no one really took the opportunity to get out of these calls. They actually doubled down, and we saw a lot of opening buying activity in the 70s, 75s, and even the 80s. So the bulls were thinking that the move had just begun. It looks like the move had actually already happened because the stock closed today at $66.10. So it gapped down again 10 handles about after it had gapped up. So unless these guys were savvy and hedged their gamma up at the 77 strike, these trades that were looking so good yesterday, it looks like they missed their chance on this whole buyout thing. So looks like there was some savvy money here going into this trade, but they missed their chance. So as we like to say on this show, the size money, not always the smart money, and they had a chance to get out for a profit. They got greedy. As Uncle Mike likes to say out in the woods there, pigs get fed and hogs get slaughtered. Is that the Tosaw family motto?
We have a lot of them, actually. We can use that one today.
All right. And that's going to do it for the odd block. But now we're going to roll right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Xpress Block. This is the portion of the show where the boys from OX take the reins and I sit back and I have a nice frosty beverage. So, Mr. Tinov, as the man in the OX hot seat today, what was lighting up your tape? What was interesting? What was going on behind the scenes at OX today?
Risk management, really. And as far as what was lighting up the tape, I would say everything. We had a steady stream of calls, some in the queue for a little bit. It was mostly a risk management day. On our side, clients, I think, put risk management, on the number 2 and hope for profits on the number 1. So, a lot of phone calls on, how do I meet my margin call? What should I do now? So it was a difficult day for a lot of people. If you're sort of learning about your position today and, the ways to get out of it, or not even curious or wondering, knowing, how to limit your loss, I think it's a little late, and the best strategy really is to just get out, offset, there will be another day tomorrow. The market will be open tomorrow. You kind of want to come in tomorrow with some dry powder. If it's very little, at least it's some. But nobody really knows what tomorrow is going to do. I mean, I can't say that we'll keep you in now. Because
what tomorrow. I do know what's going to happen tomorrow.
Ooh, yeah. All right.
You want to know what?
What?
The sun will come out tomorrow. Bet your bottom dollar that tomorrow.
Exactly.
It'll be sun.
That's very true.
In a day that's gray and lonely, I just think of Mike Tosaw and grin and say.
Nice.
I always suspected you were a closet show tunes fan.
Yeah. We need a little segment there, I think,
The Sebastian show tunes.
The Sebastian musical interlude.
The sing off, right.
I just wanted to say just a little bit more here as far as getting a little bit more detailed. A customer had called me today. He had some puts that he owned in his account. He had a couple of them, and they were on the Dow. And he said, I'd like to sell some of these today, but I'd like to do a few right on the open, so I can, have some cash for later today. How do I know where these are going to open up? And I said, good question. And, there's a couple different tools on our site that you can use. One of them is the option pricer. Okay, that's under the toolbox tab. It's a tool like that you can use that really is going to be asking you to input the days till expiration, the implied volatility, and the last trading price. Now, when we used it this morning, these values do come up in there, and I said, now all we really need to change is the last trading price. So let's kind of use what's happening on the pre-market, and we can get some good idea about where these options prices will open up. And we did, and he was real satisfied. He was like, wow, I never knew that was out there. It really helps a lot. And he called me back later and he said, thank you very much. That worked perfectly. So, there's a couple tools there are, you can use on days like today. So just saying, on our site for, an instant like that. And as far as risk management goes, be a little bit more prepared, other than on a day like today about what to do.
Yeah, there's no excuse for not being prepared on a day like today. It's not like this is the first 40 handle S&P down day, 400 point down day we've seen in a while. This has been this is almost par for the course in this environment. So we've seen this 3 or 4 times just in the past month. So if you're unused to how to behave in this environment by now, then shame on you.
Right. If you think you can win an argument with a risk manager today, it's not going to happen. He has too many phone calls to make. There's a lot of forced liquidations, and it's really unfortunate. I don't think they're really that necessary, but they do happen, and it's really because the firm is at risk. That's kind of why we take that action. So. Just be prepared, I say.
Good advice for the Boy Scout and all of us from Tim Navabi. Thank you.
Tim, that was actually great advice. I love the line, if you right now you're asking about risk management, it's too late to ask about risk management. That's the Tim Navabi special of the day. Every day there's some nugget of just amazing information that comes out of that kid who happens to be older than me.
We should put up a little segment of the website, the Tim Navabi's Nuggets.
Navabi's Nuggets.
Navabi's Nuggets. There we go.
Navabi's Nuggets.
All right. And before we go far, far down the rabbit hole, we're going to close out the Xpress Block and roll right into the Strategy Block.
The Strategy Block.
And welcome. This is, of course, the Strategy Block, where Uncle Mike Tosaw comes down from the mountains to illuminate us with some options, topic, or tidbit, or trick, or strategy, or educational tidbit, perhaps even a nugget, if you will. So, Uncle Mike, what do you have in store for us today in your very, very patriotic Strategy Block?
America. That is what it's about today. We've been through a lot, folks. On days like today, a lot of people want to give up on the markets, and not necessarily just the markets, but on America in general. Guys, we've been through World War II, the Great Depression, World War I, Korea, Vietnam. We've been through the bear markets of 73 and 74. We've been through the flat market of 74 to 82. We've been through 10% unemployment back in 83. We went through the crash of 87. We had the S&L crisis back in 89. We did the tech bubble and the tech burst. We had all sorts of crises. We've been through a lot, and we've always found a way to get through it. I have faith in America that we're going to get through whatever this is, a double dip. Even if this is another Great Depression, I have faith that America is going to survive. Now, does that mean that I have faith in politicians? Good gosh, no. I have very little faith in any politician. But what I do have faith in is the will of the American people. Now, at Know Your Options, we are long-term bullish, short-term cautious. And on a day like today, I want to reiterate my stance on the U.S. stock market that we are still very much long-term bullish. With what we've been through throughout our history, America is going to survive and America is going to prosper. However, I also want to reiterate that we are short-term cautious. On days like today, folks, you have to have a plan for in case the market goes against you. Now, if you're 22 years old, you're fresh out of college, you're putting money into your 401k, maybe $50 a month, $200 a month, you really don't need option hedges, in my humble opinion, just because of the fact you have plenty of time, and I believe that buy and hold will work for you. However, if you don't have a lot of time, if you're maybe in the baby boomer era, or maybe you've built up a larger sum of money, then you need to be more cautious, and you need to have a plan in case the market goes down. You're no longer in the building stage to where, oh, the market went against me. Oh, I'm down $7 in my $50 account. You're dealing with real money, and you need to have a plan in case it goes down. Whether you're using the VIX, whether you're using stop losses, whether you're using puts, whatever the case may be, you need to have some type of a plan in place. Obviously, if anyone's listened to this show more than once, I'm a little bit biased towards the put options, but you can make a legitimate case for a lot of different things. So, to close out today's strategy block, my strategy is have a plan for down days like today.
So, Uncle Mike Tosaw, stay strong, America. Bold words from the man of the mountains. And also, as Tim Navabi might say in one of his nuggets, be prepared for days like today. Perhaps have some puts in your back pocket, some units for a rainy day like today. And that's going to do it for this very patriotic strategy block. And now we're going to roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is, of course, the portion of the show where we discuss what's lighting up our own personal trading screens and what we're watching in the markets for the next few sessions. And as we discussed, there is a lot of uncertainty going into the weekend this weekend. A lot of people thinking that the contagion in Europe, the debt contagion, if you can call it that, is just going to spread like wildfire. So a lot of people keeping their powder dry going into the weekend. Obviously, VIX volatility levels crawling up, or I shouldn't say crawling, shooting north yet again. So a good time to indeed keep your powder dry. If you have been speccing to the downside in VIX, it's perhaps time to add an upside component or just close or roll if that's what you're leaning on.
I was looking at VIX and VXX. You can put on the March 50-75 1x2 for a credit in VXX. That is how scared people are. Not only did the VIX break its last high, so one of the things I was pointing, the only thing that was like kind of encouraging to me that was going on was that VIX had kept getting lower highs and lower lows. Well, guess what? We just blew through our last high, so we actually hit a higher high than our last high, and VIX option implied volatility exploded today. There are a lot of things out there that I really, really, really don't like. I don't see how you cannot want. I don't think selling premium makes sense here, traders, is what I'll say. You got to own the short term. I know it seems expensive. It's not. You got to own the short term and sell the long term stuff if you want to get short some Vega. But I think we've got a nice shot at a run at 50 here. I'm telling you. So stay on top of things, folks. That's my Around the Block.
As Tim Navabi might say, be prepared. But yes, a lot of trading opportunities across the board. Oh, Tim, I didn't get a chance to ask you, since the Widowmaker was one of the only names up on the day today. Was that one lighting up your tape again? What are people doing over there in OX? Are they diving into this bearish train in Netflix? There seem to be a lot of bulls in Netflix over there. Are they buying upside again? What are they doing out there?
No, there's not too many people in Netflix. I mean, really, not at all. I think it really did its damage to people. Things that were really kind of lighting up the tape actually were, I think people sort of got a handle on some of these, these inverse ETFs. And I don't mean, by selling calls and puts on them and then saying, wait, what do I want the market to do? That was last year. But, what really is lighting up the tape is people are really, starting to buy these for the real short term, some of the inverse ETFs. I mean, they were very active today. A lot of people, playing a lot of different ones of the sectors in the inverses, and they knew what they were doing. So it was kind of pleasant.
We discussed these a little bit with Rob on the last show, and one of the things to definitely mention if you're thinking about playing in either the inverse ETFs or the options on the inverse ETFs is that the margin requirements are a wee bit tighter on the inverse ETFs, particularly on the options these days. I know a lot of OX, as well as many other brokers, have tightened the reins on how much leverage you can get on the options on a lot of these ETFs.
Yeah, and like I said, for a while people were trying to sell premium on them, and they would get what I would always say is ultra confused, because I would always be ultra confused, and you know what I mean? So.
Yeah, it is a little counterintuitive to think what you're doing if you're selling an upside call in an ultra short 2x ETF. You have to stop and think for a second. Wait a minute, what the hell am I actually? Which direction am I betting on?
I would always just say, you can buy a SPY call or put. It's if you're really doing something like that and you're getting confused about it, really you shouldn't be doing it. But I think, and you're right, some of the margins, they're a little bit more than some of the other indexes, but to play them as a stock, very, very nice, or is a nice short-term direction trade. They work well.
Yes. They're often viewed by a lot of people as an options surrogate. Instead of getting into options, they get into the levered ETFs, and then a little bit more of the advanced and more nuanced ones use the options on the levered ETF to increase their bang for their buck. But speaking of levered ETFs, I know, Uncle Mike, you don't play in that ball game, but what are you guys watching over at KYO aside from monitoring your levels here on GLD and SLV going into the weekend?
I were looking at that. What I think is interesting also right now, Apple held 400 today, with everything going down like it has.
Yeah, I thought that was a little interesting as well. Just watching this, just incredible run up in Apple post Steve Jobs
Amazon
lately.
Too. Amazon, and then the fact that Netflix wasn't down, does that mean that that we're at the bottom?
The selling is done.
I mean, it doesn't. It must. No, but I mean, it is interesting that the market sells off 40 handles and Netflix is up on the day. The bastard child of the entire market is the only stock that's not down. You got to wonder whether that signals any type of bottom in that stock.
Hey, the last time we saw something like that was MMI, and what happened to them a week or two later? They got gobbled up.
And so, Amazon apparently, the combo of cloud and whatever, and people may think that they have the power to take on Apple, and that Netflix just being Netflixian, and then Apple holding 400. I think seems like a grouping of interesting looking trades.
Because even if you look, the Nasdaq hasn't. The last 2 days it did, but even Apple's been playing a pretty big part of the market again. So that's technology is definitely something that we're looking at. And for a while, our beloved Ford was actually even ahead on the day for a little bit today when the market was down. So
it's interesting what a flight to safety is now, right, Mike? Think about that.
Oh, totally.
Apple is a flight to safety in many ways.
Netflix safety, baby.
Yeah.
Flight to quality.
The only reason you'd say Netflix and safety in the same sentence is if you accidentally farted.
Or if Netflix was your safety word, perhaps, in some very. All right, we did go there. But Uncle Mike, speaking of Apple, it was interesting to watch them hold that level today. And it's also interesting to watch the run-up that we've seen in this name. I think a lot of it is just due to the constant stream of iPhone 5 rumors coming out. Where are you guys positioning in Apple right now? Vol relatively cheap.
We have, it's collared like usual. We're a little bit looser than what we like to be in the collar right now. We're at the 375 is where the put is right now, but it's one that will probably be rolling that up tomorrow just to kind of see what's going on. Originally, the collar was at the 375 400 level, but we've had to roll up the collars or the call so much that it's just been kind of tough with that. So this is a situation to where when it runs up, we'll take the gain, and we'll be more than happy to admit that we were dumb to collar because obviously it went up. We should have just bought the stock, and that's a very joyous place to be in comparison to, what if we would have bought puts? So probably going to roll up the puts a little bit, and we're seeing what tomorrow brings. But what I thought was just very fascinating today was the 400 level. It broke for a little bit, but I'm just looking at and on my streaming quotes right now, it's at 402.30.
Yeah, it's bouncing up in the after hours. Apple's one of these names at these levels. I would love to be long some premium here, but like I said, my time to scalp gamma is limited, and B, even though vol is relatively cheap, I think it is inflating a bit going into all these rumors about the iPhone 5 coming out. And I have to imagine that the iPhone 5, whatever they're going to call it, iPhone 4S, is going to disappoint. It can't really be the end-all, be-all phone they're looking at. So then you're looking at your premium coming in like an earnings event. So it's one I've kind of stayed away from, even though it is relatively attractive here.
They're gonna,
If we start running, don't be surprised if we. Sorry, Mark. Go ahead.
Oh, I'm sorry. No, 450. I'm with you, Mike. 450. Were you gonna say 450?
I was just going to say, if Apple starts running again, don't be surprised if we go to just the long put strategy and just get away from the collar for a little bit.
Makes sense. That
makes
sense.
The long protective put strategy.
Yeah. No, I'm with you there. Mike, another thing you could do is kind of have you ever done a call spread instead of a straight short call? That way you get like you do still collar, but if the thing really, really takes off on you, you could get the stock back. That might be something you'd consider.
We've done that. One thing that we've done, like when stocks go in the money, and it's kind of, sometimes it's difficult to do with retail clients, but we might be able to do it with our clients that have enough cash to be in significant amounts of Apple, we've combined a back spread on a covered call that's in the money as kind of like a temporary way of capturing some upside. So yeah, definitely that, along with just buying a call and creating a call spread for sure.
All right, a lot to keep an eye on going into the weekend, and that is going to do it for this episode of the Option Block. I want to thank all of my partners in crime for joining me on the program today, starting with the man from the mountains, good old Uncle Mike Tosaw. What is coming up over at Know Your Options Inc. that you think would be sultry and attractive to our listeners?
Webinar night in America on Sunday night. We'll be talking about option time frame selection, the age-old debate of should I buy if I have a time frame of 3 weeks for my trade, should I buy a front month call or a put option and then just let it ride, or should I buy a 4-month call or put option and then buy different amounts of contracts? We'll be weighing the benefits and the drawbacks of which option to buy and which time frame to select on Sunday night.
So you said webinar night in America. So if the odd Canadian wanders in, you're going to boot him out rudely to the curb?
I didn't even think think about that.
Now, do you
webinar night in the world.
Do you always have to teach these, or does Kavanaugh ever pick up the slack here?
No, it's my thing. I think that when I was working at OX, I set a Guinness Book of World Records for most webinars ever done. Back in those days, I used to do 8 of them was very common per week. So now 1 a week, not a huge deal.
Well, I'm just saying, what if the Bills are playing? Then who covers?
Ooh, good question. I'll have to go there and just broadcast live from the sidelines.
Oh, that's funny. That's funny. Yeah, if you go to a Bills game because you tried out with the team and stuff like that, do you get any type of preferential treatment at all?
No, they'd probably say take a hike, stupid.
Oh, really? Nice.
Most likely.
Right.
And that tinny voice means it's time to hear what's coming up over in Option Pitland from good old Mark Sebastian. Are you rocking the Yeti today?
I'm rocking the Yeti.
You need to turn up the bass a little bit.
All right, let's see.
A little deep bass for Mark Sebastian.
Better?
There you go, much better.
Better?
There
All
you
right.
go.
So, we have this on October 21st. I've got an all-day event trading futures and options. It's at the Chicago Mercantile Exchange. You can go to optionpit.com/events to check it out. And we're going to be in Las Vegas for the Traders Expo. So that should be a lot of fun as well. So make sure you check that out.
And Mr. T-Knob, what is coming up over in Options Express Land, sir?
Well, I got a couple things here this time. Not like last week.
All right.
What do you know?
Preparation. Wow.
He knows what's going on in his own company.
Somebody must have been listening, huh? Yeah. So on our education and events site there is intro to the long put. That's on 9/27 at 9:30.
Intro to the long put. I can't wait for the outro to the long put.
Yeah, exactly.
Who's presenting intro to the long put?
Intro to the long put. That is going to be. I don't have any name here on that one.
Anything else on the old docket there, Mr. T-Knob?
The short put, that's on the 4th of October, 9:30 Eastern. As far as live events, nothing scheduled yet that I can see on the site.
T-Knob will keep you posted if any live events do show up. But I also want to remind our listeners that we will be live. Speaking of live events, we will be live at the Futures Industry Association Expo here in Chicago, October 10th through 12th. You can come on down to the exhibit hall and watch us record live on the 11th from 4 to 6 p.m. and on the 12th from 1:30 to 2:30 p.m. And don't worry, you don't have to pay the $50 fee to get the exhibits hall pass. There are a number of vendors out there who are providing complimentary exhibits only passes. So just search for complimentary exhibits pass for FIA. Should be able to find those, and we'll work on getting you a few of those as well for our listeners in upcoming episodes. But that is going to do it for this episode of the Option Block. I want to thank all of you out there for downloading and streaming and subscribing to the program and making it such a success. And we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated, all rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.